My name is Nick Green, and I'm very pleased to be able to welcome you to this morning's Criterion webinar looking at innovation and underwriting in the protection market. The idea for this webinar came about as the result of engagement that we had with users of our standards and our other stakeholders around the FCA's market study into the PREA protection market, and in particular the interim report that it published early this year. Now, whilst that report didn't generate significant impact for Criterion and is still at interim status, what that generated for us were just a whole host of really great conversations with our wider stakeholder community, and we felt those conversations were simply too good to be able to keep to ourselves, and that's why we wanted to bring our panel together this morning to share some of those thoughts and insights with this wider audience. Before we get into that, though, just a word on housekeeping from me. First of all, as you were should have been warned as you joined the call, this event is being recorded. We do plan to make it available through our website and YouTube channel. So important that I highlight that at the outset. We're very much hoping for some great engagement from the audience this morning, and you can get in touch using the Teams Q&A function that I'm sure you're all familiar with by now. That function will make available to the event as a whole your name. So again, it's worth highlighting that at the outset. That's it from me in terms of framing today's discussion. I'm absolutely thrilled to be able to hand over at this point to Poppy Achilles, a long-standing, we were discussing just before the call, industry stalwart and veteran of the protection industry and the wider financial services industry more generally. And I'm thrilled that Poppy is going to be chairing this morning's discussion with our illustrious panel. Poppy.
Nick, thank you so much, and thank you for the introduction, and it's great to be here. So look, I'm delighted to be able to chair today's conversation, but the meat of the matter really lies with the four industry stalwarts that Nick refers to. So I'm going to introduce everybody firstly. Adam Higgs, who is the head of protection over at St James's Place. Adam, welcome, and lovely to see you again. Dale Woodward, the principal underwriting consultant from iPipeline. Dale, we met briefly the other day, so it's lovely to see you again as well. And then we have Georgia Perkins, who is Market Development Manager over at Legal & General. And as a side note, actually last month's Women in Protection Awards, Georgia, I believe you won the Educator of the Year award. So congratulations from me and no doubt everybody else on the call today. That's great work. And finally, last but not least, industry heavyweight, Mr. Cracknell, a Commercial Director over at Underwrite Me. And to call upon Nick's point there earlier, we do have a chat function. When I'm chairing these things, I always say to the delegates on the call, look, and we have 45 minutes here today to listen, to learn, but most importantly, to extract value. And I will drive as much value as I can from the four individuals on the call. But to kind of make it more wholesome, I would suggest to everybody, please engage in the polling that Nick's going to show up. But also, if you've got a view to a question, or if you've got a question for the group, put it into the chat, please, and I shall weave it into the conversation. But to kick off, I'm going to direct the first question to Mr. Higgs. Adam, so the FCA document, I believe the market study was due to be delayed, but I understand now that actually it's going to come in on time around Q3 2026 this year, right? So in that document, they say that the protection gap exists largely because people are not prompted. So in that role, in the context of today's conversation, what is underwriting's role in enabling earlier, simpler engagement rather than being a late state blocker? And I must admit, as somebody who's dabbled in the protection market for decades, underwriting is always something that's happened at the end of a process. I'd never even considered it as being something that could drive engagement. So what are your thoughts on that one, please?
Yeah, thanks, Poppy. So it's an interesting one because for a lot of people, their insurance needs, they really identify it at the point where it's almost too late. I think quite often you could say that the best place to advertise life insurance would be at a funeral. I'm not sure the morality of that, but that's the point at which everyone is there thinking what's going on financially. So people that become ill often realise that their need for insurance. The whole period of COVID identified to many that actually they were woefully underprotected, and it led to a massive spike in protection, and particularly income protection during that period. So I actually think the underwriting process does become a blocker when it's not explained early enough, and I think you hit that now on the head. Quite often, and we see this a lot across the industry, particularly for advisors that are not protection specialists, shall we say. The first thing or first conversation they have with a client around their current health is at the point at which they're completing an application. And at that point, it becomes a surprise because standard rate quotes have been issued already, and the client's been given a price which it now turns out they're unlikely to get. So it's all about being able to communicate with clients upfront around what their actual price will be, and this will be music to Mark's ears, given where Mark works. But being able to give, even if it's an indicative quote, as early in the process as possible is really going to help people get over the line. And again, where you see differences between a D2C journey and an advised journey, hopefully the advised journey, there would be more conversations up front. For a D2C journey, it really needs to happen as soon as possible within the process of them investigating whatever insurance it is they're going after. So simple answer is just talk about it as soon in the process as possible, and really set expectations as early in the process as possible.
Okay, thank you for that, Adam. And I'm going to ask if any of the other panelists want to kind of chip in there. I want to ask a more pointed question, if I may, to the group. Is something like pre-underwriting or pre-assessing at a specific life point, right? So for example, if I'm a customer and I may get married, I may have kids, I may have a mortgage, are those the kinds of scenarios you could start to pre-assess with a customer before they've even thought of them?
So maybe I'll jump in, Poppy. So I think from our viewpoint, it breaks down into looking at how customers want to access this type of product. So broadly, you could say you've got a group of customers that want to buy a basic form of life insurance or protection online. You've got, and they can probably do that without any real advice or whatever they do, but they want to buy online. So at the moment, one of our issues is we have a tendency to put them in online, but only a very small number of those customers will convert online, and we try to put them into a different channel. And they don't want to do that. They want to buy online. So the question is, how do you use underwriting and technology, chatbots and that sort of stuff to enable those customers to complete that process? Because fundamentally, I wanted to buy a term assurance policy online, and that's what I want to do. I don't want to necessarily talk to somebody. I think then when you then look at so if you look at mortgages, for example, there are many ways we now can bring forward the underwriting decision to the front of the mortgage. Because if you look at a mortgage, if you wait for a mortgage, you get a mortgage decision in principle virtually instantly. Well, we can do that for life insurance today. What we need to do is we need to work with the intermediaries to enable that integrated process to happen. Because what happens at the moment is I go to buy a mortgage, I get that decision in principle on the mortgage, but I don't get the decision in principle on the life. And the sort of the connectivity between the advice process breaks down. There's too many people being handed off into different parts. And hence you end up with a situation where the mortgage to life sort of penetration isn't as high as it needs to be. So I think there are ways we can fix all of that. I think the biggest challenge we have is in the investment market, in the wealth market, where That's far more complicated because you tend to have much older customers, much more complicated risks. So, we can build unique underwriting journeys for every single channel. We can do that with insurers today. That's not a problem. It's just understanding how we then work with the intermediaries in a really integrated way to access those customers. And that is happening today because the intermediaries, I think, recognize that there are lots and lots of customers at the top of the funnel, because there are lots of customers wanting this type of colour, but not everybody. So we can't treat all customers in the same way. We have to say, right, so Poppy wants to go online, so let's get Poppy to buy online. Let's not force Poppy to do something she doesn't want to do. Poppy or Georgia wants to go through a mortgage. Well, how do we give a buy now decision at the same time for the life as we're doing for the mortgage? So it all becomes one package of product for her. And then for the investment stuff is, well, so Adam's a multi-millionaire. He wants to cover his pension problems and inheritance tax problems. Well, how do we enable that without Adam having to go through some horrendous underwriting process that Adam really doesn't have the time and patience to go through?
Mark, thank you very much for that. So Adam, just to finish up on the question, right, because we've got to get through multiple questions on today's call. It sounds to me as if that the ability to pre-underwrite is there. The technology, the capability exists, but maybe the advisor process it's not integrated into that process or conversation. Where is the missing link? Because if the tech is there and the advisors are there, why are the two not connected?
Many reasons. So not all insurers are engaged with the tech that's available for it. So it's not a kind of whole of market solution at this point, I would say. I think it's something that advisors are crying out for. The issues with many things is there's still an awful lot of questions to go through in order to get decisions. In terms of buy now decisions, indicative decisions is a different conversation altogether. Advisors want everything all in one place. They want as simple a journey as possible, and we really need all insurers to really engage with the tech that's out there to ensure that advisors can have the answers they need all in one place without going out on fragmented journeys where they can get some answers over here and some answers over there. The reason that pre-underwriting tools that insurers develop don't get the use that they need is because from intermediaries is they work with more than one insurer. So it's great if one insurer has a pre-underwriting tool, but are we saying that an advisor has to go off to 15 different insurers and go and use 15 different tools in order to understand which insurer might approach whatever condition is in the best possible way? So bringing it all together, I think, is the key to this, and whoever can do that is really going to win.
Adam, thank you very much for that. I'm conscious I'm going to head on to the next one. So the takeaway for me on that one is that the technology exists, the capability exists. You've got distributors waiting here to kind of support this demand that they're trying to build in the market. But what you need is some more insurers to get on board with the technology that it supports today and connect that into where the advisors are going, which is where the portals or the underwriting engines, right? Okay, well, it's built. It just needs to be connected, I think, is what I'm hearing from you.
So Poppy, the only thing I would say is I think we just need to accept also that lots of different distributors operate different tech platforms. Okay, so it's not the insurers necessarily.
Okay.
So you go around all the big distributors in the UK, all of them work in a different way. So yeah, SJP's got a different tech platform too. So they've all got different tech platforms. They've all got different back office platforms. So it's the complication is not just with the insurers, it's how you map the whole integrated end-to-end piece together, because you've got a customer up there that just wants an answer, but that answers, it's not as simple as Legal and General saying, yes, we can do this. Actually, it's got a full integrated end-to-end piece. It's really, really complicated when you throw in, for example, you look at SJP's back office, not wishing to highlight Adam, but you look at how, all the different systems SJP might offer, well, that makes a very, very complex situation.
Connectivity challenges, I think what I'm hearing, Mark. Okay, well, listen, Adam and Mark, thank you very much for kind of taking the lead on the first question. I'm going to now definitely hand over to Nick because there's a polling question. So if you're on the call, please get your fingers ready to respond to the question. In your experience, where do protection applications most commonly stall before going on risk? Right, what are the responses, Nick, that we're getting?
They are starting to come
Oh,
in
here we
now.
go. Oh, looks like there's a clear leader.
Yep. So we're seeing medical evidence, GP reports, clearly in the lead there, Poppy. Underwriting decision turnaround, interestingly, given that discussion coming in second, and a couple of others. Great to see that long or unclear questions don't seem to be an issue out there, and that nobody's unsure. Everyone has a view as to where things can stall.
Right. Okay. Well, I think the response to that question is pretty clear. It's medical evidence. How the industry responds to that challenge, I've got no idea because it's something that's possibly outside of our control. But I won't go into that one because that's a bit of a black hole. But I'm going to go to Mr. Cracknell next, Mark, if I may, with the second question. The FCA flags that people with complex medical needs have more limited choice. How do we improve access without blunt pricing or exclusions? So I guess if I were to refine the question, is something like proportionate underwriting something one would consider here as an answer?
So I think 2-1. There's a fundamental issue is how do we more effectively access medical records? Because the more medical data we can get on customers, the quicker we can give them those decisions. So I think there's a question right at the end, isn't it? What would your dream thing to do or whatever it is? And mine will be get digital access to the NHS medical systems. That's the game changer. That's something we want to see happen because that means that we can pull through data directly on those customers, and it removes a lot of medical requirements where we're going for third-party data. Okay, so what we then need to do is we then need to work with the insurers, which is what's going on with the intermediaries to say, do we need to get that additional medical evidence, or can we offer a buy now decision on an adverse basis? And that could be a loading, that could be an exclusion, whatever, but we want to offer those customers that choice. And ultimately, it will be a choice, Poppy. They could have an adverse buy now decision, which could be an exclusion or a 5% loading on premium, or they go for a referral and they decide they want to be underwritten because the hope might be they might get better terms. So again, and that's all about working with advisors. That's helping advisors to understand that actually with the level of data and knowledge and experience insurers now have in underwriting, actually those adverse buy now decisions are really, really good. The likelihood is they won't be that different if you pulled back full medical evidence and went through that process. Because I don't think, we haven't got insurers today, but I think insurers would be open enough to say, we have, Georgia, I apologise. We will be open enough to say they don't really want to manually underwrite because it costs a lot of money, it's really expensive, and therefore it's working with those insurers and with the intermediaries. I think it's an education process and it's a risk process, which is actually, is it better on that type 2, that diabetic with a long family history to offer an adverse or offer a buy now decision on slightly adverse terms than it would be to underwrite them, because actually the decision's probably not going to be that different, and there's a very significant cost in underwriting that customer in the first place.
Mark, thank you so much. I might just come to yourself here, Dale, from iPipeline, and in your role in terms of underwriting. For this particular customer group, those with complex medical needs, what are the key things that are happening in the underwriting world that are kind of supporting these customers, and what's happening in underwriting that's actually driving this kind of blunt pricing or excluding them? What are the two kind of angles here?
Thanks, Poppy, and hi, everyone. I'm not so sure that blunt pricing or blanket exclusions are really genuine practice. I think all providers work tirelessly on rules to try and drive immediate acceptance, but I think there will always be manual underwriting elements because some medical conditions will always be too complicated for customers to understand themselves. And so, without Mark's and probably echoed by everybody else's sentiment about having access to medical evidence, the improvement that can happen to people with complex medical conditions is the awareness about the process and the stages that go through. Certainly from an advisor perspective, that we need to move from an upfront starting point of what do I need to know to that education where advisors know what they need to get for protection disclosures, and so that providers can turn around and say, here's how that information will be assessed, rather than the back and forth that takes place even prior to the application sale. Once it's in underwriting, it's been there's been lots of innovation coming through on speeding up turnaround times in assessment and decision making, but not so much on the actual obtaining medical evidence, which is there is a solutions that help, but it's still got a dependency on GPs performing a task, for example.
Thank you. Dale, thank you so much. I'm going to hand it over to Georgia or Adam. Do you have any particular thoughts about customers with complex needs being limited at all? What are the big things? Maybe I'll come to you on this one, Georgia. What's one big thing that excludes this customer group that firms could consider revisiting? Product redesign?
Yeah, bespoke products would obviously be fantastic. I think the problem with that is that's a lot of innovation and it takes time to build those sort of things out as well. I think one of the areas that I certainly work with in my role is ultimately what the gold standard would be to engage with clients as early as possible, as young as possible with protection before they get to that point where they become that complex customer. Now, obviously, that's an ideal world. That doesn't happen all the time. That's what we're trying to improve upon. And I suppose that Adam, you mentioned it in that first question, that tends to almost be a prompt for clients to take out protection, is when there is something affecting their health or they've been through that. So we really try our best to help equip the advisors with the conversation, because like Dale said, the more knowledge that you have around that, the better engagement you have with the client, so it doesn't become a blocker. Because what we do see is there can be a lot of anxiety and stress when talking about someone who has had ill health or they've got ongoing disclosures, where those questions that we work on so much to try and limit the amount that we have or the need for further evidence don't become as almost a re-traumatizing, which then actually makes the process seem a lot worse than it is. We are asking questions for a reason, and we keep working on those questions to make them as smooth as possible. With the complex needs, though, what I would say is we are seeing more than ever with the technology that we use, more and more going through without medical evidence. And it is interesting to see that poll answer, that being the number one blocker. And that really is that one area in the process that's completely outside of all of our control. So that's really the area that we can't improve how quickly a GP sends something back unless they're engaging with those different texts of IGP reports. And I'd absolutely love to have access to everybody's NHS system with their consent, of course, because that really would be a game changer. But it's linking and getting everybody on the same page with things like that, and it just takes time. The thing that I would say around exclusions is it's a kind of a love-hate relationship with exclusions, because actually there's a lot of people with complex needs that wouldn't get covered without an exclusion. So where used appropriately, they are actually a great way of opening up the industry to people that wouldn't think that they would get cover. And I don't know if Adam, if you would say the same thing, but I do come across a lot of advisors that do state clients with complex needs already have a blocker up against protection because they think they won't be able to get it. So introducing underwriting earlier, using the tools available. We have a new pre-sale underwriting tool that you can use, advisors can use 24/7 to give even more complex indicative decisions. It's making it part of your process, and it's breaking that human habit, and that's a big ask, and that's something that we try and help and work on at L&G. But it's kind of tying everything together that everyone said, really. It's not going to be a one hit done fix.
But that's great to hear that, actually, your perspective there. But you've kind of alluded to Adam there. Adam, so from a distributor perspective, these kind of pre-underwriting tools that Georgia mentions, where you can start to assess the customer much earlier, how effective are they really, and to what extent are advisors really using them?
It's a mixed bag. I would say that there's some tools out there that are better than others. There's a lot of tools that will only look at, say, one condition at a time. So if you've got a client with multiple conditions, they're not as effective. Some tools are not almost fully replicating the full underwriting rules engine that the insurer would have. So I think they are useful. I'd go back to my point that for a lot of advisors, they're not just working with one insurer. So it's great to have access to these, but going to 10, 16, however many insurers you're working with and going through all of the tools is really time consuming. I just further George's point there, because I completely agree on the exclusions side of things. I don't think necessarily, I mean, I wouldn't want insurers to just start throwing out exclusions because it's an easy alternative. But for many clients, they're more than happy because accepting an exclusion on something because they realise that that's something that is limiting them from having insurance at all. So for quite a lot of people, they'd quite happily accept, I don't know, if they've got a musculoskeletal problem or something like that, they're going for income protection. A lot of clients may accept a musculoskeletal exclusion because they're more worried about, I don't know, cancer or some kind of accident stopping them working. Likewise with critical illness and others, things like that. The one thing that I'd also add to that conversation is underwriting, for very, very good reasons, has become hyper personalized in terms of the way it's worked, and it's moved a long way away from the original types of insurance in terms of pooled insurance. Indeed, there's only kind of over 50s and group risk that are really now still using pooled insurance kind of methodologies in the way that they used to be. Pooled insurance isn't the answer for everyone that has complex medical needs, but I think you find for quite a lot of people, if they've got access to something like a group scheme, they're far more likely to be able to get cover within free cover limits and things like that, based on the way they work, and pooled insurance to be able to get any cover in any event.
I think that's a whole discussion in its own right, isn't it, Adam? We could end up in a bit of a rabbit hole there. So Criterion, there's a whole conversation to be had around pool risk and underwriting models. So I'm going to move on to the next question, but thank you very much for that. But Georgia, this one is directly to yourself, actually. If the protection gap is partly a journey dropout problem, then what are the routes to stopping that, reducing that? And you spoke about one of the friction points being about medical records. What causes the dropout, and where have you seen success? If you fix that, actually you see a reduced dropout rate. What's been the experience at L&G?
Yeah, so we look at it in two different areas. So number one being strengthening the advisor conversation. So before we get to application stage, that is really where we can make the biggest difference. It's where advisors have control over getting those clients the cover and having those better client outcomes. So we work with them at their whole process, looking at where we can fine tune things, because ultimately what we understand is that clients have sort of a term I call a kind of a curiosity budget, which is really like a finite amount of attention, energy, or willingness to engage in the conversation overall. So our job is to really help protect that budget, not to deplete it. And then that feeds quite a lot into that reducing the dropout once the clients enter that application journey. So where we can, reduce that kind of dropout with the amount of questions that we're asking, the types of questions that we're asking, where we need to go for medical evidence or financial evidence as well, lifestyle evidence. So everything that we can, we try our best to reduce that depletion. We've mentioned indicative underwriting is one way to help engage with that so that they understand why there's the need for medical evidence, because that's one of the hurdles. And what I would say around that is we do work in an insurance industry where if you go out and you're trying to make a claim on anything else, so say your travel insurance, that is hard to get sort of claim money back on a holiday that's been missed because of ill health. The amount of evidence and things that they need, and that sort of perspective can really tarnish what we do. So we try and really help advisors have the confidence and the passion to help talk up insurance and how we work and everything that we try and do to help them get through that process. But that's the starting point. How can we get the client engaged early on throughout that conversation? And then where can we streamline things as much as possible once we have it as that provider, being able to get that application through? So there's a strong emphasis on technology. We're looking into things like AI, where we can help that application journey as well. Can't go into too much detail around that yet until things are launched, of course, but we are looking at all of these things to make sure that there aren't those dropout rates along the way where you get that burnout, that cognitive overload that clients have of, well, now we spoke about this 2 months ago, we've still not got the GP, but I can't remember what we spoke about and why. It's helping the advisors engage with them post journey as well. So it's kind of twofold. It is tricky, and we appreciate that one of the big blockers is that advisors are very busy. Very, very busy. So really trying to help position themselves as protection specialists is what we help with as well. Because if you're just a mortgage broker, your focus can very easily be and take over completely on the mortgage, and protection come last. And it's the same with wealth advisors. Where we're seeing that big uptake and prompt now is with the IHT changes coming in next year. There's that bigger focus on this area now, and where we're seeing is that we need a lot of advisors to have the help to help upskill them with the conversation. I've definitely lost count of the amount of advisors that have got the most incredible product knowledge, but they struggle to have this underwriting conversation. They struggle to maybe just chat about, very personable things to a client. So the more we can help them get comfortable with that, the more it puts the client at ease. And again, like I said, help with that cognitive overload and reduce that and protect their curiosity budget, so to speak.
Gosh, I'd be interested to know actually what that underwriting conversation looks like. But again, I think that's a topic it's a whole topic about how do you have a conversation about underwriting with customers. I'm going to defer to Mark here very quickly. Mark, from an Underwrite Me perspective, in terms of the dropout, where do you guys see the big dropout happening in your journeys, if you can share at all? Are there
for example, so if you looked at an online journey, it would be a client starts making disclosures. So, for example, reflective questions start kicking in. So I put in, I've got family history of diabetes or cancer or whatever. So immediately, because the technology is so clever now, reflective questions will start kicking in. The client will either cope with that or become bombarded, and they'll drop out of the journey. So what you do at that point, you give the client some assistance. So that's where chatbots, the tech, the ability to walk them through that application, perhaps get them to talk to a human being. But what tends to happen at the moment is that client, the journey will end for that client, and then 72 hours later, they might get a phone call back. Well, 72 hours later, they've lost interest in that. They won't buy. So we need to recognize that. I think in an advised journey, so it's working with advisors to help them to use the technology. So my first piece of advice to advisors: only ask the questions that the platform asks you to ask. So one of the problems that advisors have sometimes, and it's really difficult, I'm not saying they're doing anything wrong, by the way, is they'll get into a conversation with advisors with a client that will then mean, for example, they start putting free text into a platform. You put free text into a platform, case refers. Okay, so use the tech. The insurers only ask questions, and the reflective questions come up when they start that they need the information for. So if you ask those specific questions and you say, Poppy, please, can you tell me this? Poppy, please. The system, the technology will give you the answer that you want. As soon as you go off-piste for and you start putting in stuff to say, well, Poppy said this, and you put in a free text, the computer technology is going, I don't understand this. It doesn't align with how I think, and therefore I'm just going to refer you. So you do see a lot of referrals, for example, with free text. So I know all the insurers and us as well, we try to remove as many options for free text as we can now. So my advice would be use the tech. The tech is really clever. The reflectives and where the insurers have got now with reflective questions is really, really impressive. So if we pull those through and the advisor just asks those, you will get more and more buy now decisions, whether they be standard or adverse, because the tech can say, yeah, I can understand the risk, therefore I'm willing to give a decision.
Okay, thank you so much, Mark. So my reflection on that is, in terms of the question, advisors don't ask more than that's required, and stick to that. And Georgia, from your perspective, it's focusing on the underwriting. It's developing the conversation around underwriting, and how you have that with advisors and also with your customers, right? And honing that. I do wonder, question to myself, how much time and effort the insurers are actually putting into building out those tools or mechanisms that support that conversation.
Just as a little add on that, they do spend a lot of time, but if I could ever give any advisor a piece of advice, would be to lean on the providers. We are here to help any area of upskilling that you can possibly need. So, if it is an area that you think I'm not most confident on, I think I do okay, but I can always improve upon it. Reach out to whoever looks after you, and they will do everything they can. It's certainly around underwriting. We run bespoke sessions on a daily basis. So, and all providers will do the same thing as well, not just L&G. They all will.
I think that's a great shout out, really. The industry's there to support everybody.
Yeah.
So Poppy, just building on that, sorry, one more. So the key there as well is we spend a lot of time working with firms on their compliance processes. So the insurer tech and our tech gets better and better and better. But if you've got an intermediary compliance process that's unclear to the advisor about how they would offer an adverse buy now decision with an exclusion against the refer, the advisor will go for the refer every time, because if there's any ambiguity, what they don't want is they don't want their case to be pulled and them to get a problem, and it to be red flagged. So again, we need to work with the advisor firms to make sure that at all points their compliance processes are aligned, so that if you have got an adverse buy now or a refer, it's clear the compliance process and how they can offer that adverse buy now to the customer, rather than the advisor not being sure, which then leads to the refer, because they will go for the point where they're confident that they'll get that compliance sign off that they need.
Mark, thank you so much. And also to Georgia. I'm going to head to Nick again. Nick, there's another polling question, please.
Coming up right now.
Where should underwriting and innovation investment focus next to reduce delays to on risk? Gosh, there's a question. Lots of long words in there. Where should underwriting and innovation investment focus? This is a lovely segue, Dale, into the next question. So I wonder whether as soon as the results come, I'm going to hand over straight to you with the question around innovation is happening at speed, but what genuinely reduces underwriting delays rather than making quoting faster. So let's talk about innovation in underwriting, Dale.
Sure. So I think there's been a lot of innovation that's made it easy to start quotes and to start applications. The industry is benefiting from best ever immediate acceptance rates. However, one element of that is multi-benefit applications are bigger than ever, and income protection is seeing record inclusion in those multi-benefits. So I think there's certainly some with the existing technology that we have, where providers will need to focus on products that have typically been harder to underwrite at point of sale on income protection. That's a bit of a generalization, but income protection rarely sees the sort of straight through acceptance rates that life cover or critical illness might get. Less innovation exists when manual underwriting is required, especially to shorten the underwriting journey. So I think the next step's isn't so much about front-end speed, but it's using technology to remove avoidable delay once evidence is required. That's where time's really lost. Some good tools, including AI, are speeding up underwriting assessments, but obtaining that evidence in the first place is rarely as fast as customers expect. And And for me, that customer expectation is the key point here. Is everybody expects everything almost immediately, and so when something needs to take time, how are we clearly communicating why we're doing something and how long it's going to take and what's likely to come out the other end? That's innovation can happen more there. And even in an advised business, I don't think that's necessarily communication between advisor and provider and advisor. The end customer still needs to be kept in the loop, and if there's a tracker that advisors can look at application statuses, then great. But how much of advisors, it's then pushed back to them to keep the end customer in the loop, and that those that aren't able to do that effectively will have an impact on the end customer losing interest. So there should still be some more direct customer engagement and keeping them up to speed.
Dale, thank you. I'm going to broaden this one out, right, to the wider group. Innovation, investment. What should we be focusing on? The group are, everyone is saying evidence ordering and retrieval, but how is AI kind of driving any innovation across the broader insurance market? What are the signs that we're seeing that people are investing in this? I might come to you, Mark, on this one, given you kind of sit in this world. What comes next?
So there's a lot of work going on using AI on the behind the scenes underwriting the advisors wouldn't see. So that's around looking at quality of client disclosures. And yeah, there's a lot of work going on around what we call decision platforms where, how to use AI, and that will drive that forward. The only issue with AI is only as good as the information that you give to it. So underwriting is a classic example, isn't it? So AI is great for really simple stuff, but as soon as you start asking really complicated risk questions to an AI tool, that AI tool, as we've all experienced, when you ask it something complicated, will only come back with what it's been taught to do. So there'll always be an important role for a human being in underwriting really complicated risks. Certainly in the short to medium term on that one. I think then how we then use technology and how we use integration and AI with intermediaries. So looking at things like how you would trigger customers to move across channels. Why do we need intermediaries to rekey data into platforms? So if you drop out of one channel, go into another, you don't really need to do all that sort of stuff. So I think there's lots and lots of technological advances we can make. Some will be driven by AI, Poppy. A lot of that's going to be underwriting based. But ultimately, I think that the key is we've got so many customers in the top of the funnel. What we just need to do is we need to make it as simple as we can for them to access this product, but in a way they've chosen to. I think one of our problems at the moment is we have a tendency to try and drive them down a channel they don't necessarily want to go down, and we make it overly complicated for them. So that's and I think AI can help that again, help to inform the customer about what they shouldn't be doing. So there's lots of different ways where we can apply the technology. But I think we all agree, we've got loads and loads of customers. I'm not sure there is a protection gap when I look at the number of customers that want to buy this stuff and want to access. So I think there's an enormous challenge. It's how we use technology to convert those customers through their choice of channel.
Yeah, well, Mark,
Poppy, if I can quickly come in there as well. Yeah. Just I agree. Basically, I think the win is not necessarily a faster quote, it's a faster confident acceptance. And the next stage is to get straight through processing and straight through underwriting at scale, through trusted external data sources, through automated risk assessment and AI, and also, like Mark said, connected systems and communication between all of those systems to speed things up. We've got a great shop window. Customers are really happy shopping, 80% of which said they find it really easy to find the protection, but it's just getting to the back end of it that we need to be correcting. Thank you.
I'll just add to this, because AI, I think at the moment, and I don't work in an insurer, I don't know what the internal AI projects are at insurers, but everything that we've seen come out so far is using AI to make the current process slicker and easier. And what we're not seeing yet, and I'm hoping this is going on in insurers, but what we will hopefully see in the future is insurers investigating how AI can make underwriting as a whole better, not just improve current processes. So what can AI give us that is different to the way that we do, can reduce the blockers, get rid of the blockers, maybe even get rid of the need for medical evidence. We live in a world that is run on big data, and AI is very good at dealing with data. So how can AI help us understand the profiles of clients using whatever data may be available in order to make the process better, and not just read a GPR quicker for us and analyze it. So what can it do to make the whole process better, not just improve the way we do it now?
Thank you, Adam. Go ahead, Georgia.
I was going to say, I'm happy to kind of direct that one, because I think the really key thing that we see is that, you know, the clients are looking different as well nowadays. Younger clients are wanting a completely different journey. Everything needs to be immediate and quick. So I think there's definitely things going on in the background around AI and the tech on improving the current journey, just in terms of getting more cases through straight away. But like I said, there is a massive need for that kind of human element, and there is a shortage of underwriters in the industry, and we have to protect the ones that we already have. It takes a long time to train up an underwriter. I worked on a team with underwriters, and they were incredible with their medical knowledge and what they can do. And I think it's ensuring that we protect that area. So where there is that need for that specialist underwriting, those complex, we should champion the fact that that manual human touch is needed, and that's what it's for. It shouldn't be an, oh my goodness, it's gone through to an underwriter. It should be, great, it's gone through to an underwriter, because like Mark said, you know, AI can only do so much of what we feed into it. It can only go so far right now. But we know that how younger clients want to interact, even with how they bank, is completely different, and we all need to catch up on that. That doesn't happen overnight. We are talking about systems and technology that's been in place for, you know, decades, but there are things that are going to be, what's the future, where are we taking it, what's it going to look like? But we do need the collective industry to look towards that, because it is going to take that innovation, that shift towards what the new client bank is going to end up looking like. So it's going to be a long process, but one that we should all be looking towards.
Georgia, we're going to have to end on that last point before I go to that very final question, which is the silver bullet. What's the silver bullet that each of you believe that if you fix that, no issue with budget, no constraints, you would fix? But to your just point there, and a fantastic conversation to be had, but a retail style protection industry, you know, something that really serves the needs of new customers and new experiences, new expectations. You and I can probably talk forever about what the Monzo experience is like, because you just go onto the app. On a real estate that's a sign of, I know, a biscuit or smaller than a biscuit, you can see all of your investments and protection assets, right? Amazing. So I'm going to go back to Run. So Dan, I'm going to start with you. Silver bullet, you've got all the budget in the world, there's no constraints. Go ahead, fix it. What would you fix?
Faster digital medical evidence flows for me would be the key one. Something as an industry as a whole with access to medical records. And
that would require some kind of agreement with government to be able to access those records. Is that why there's is that the blocker to that dream?
I think I've just answered. I think we've got the FCA on some of the FCA on the call, but the FCA engaging with the BMA to make that easier would be that silver bullet. Absolutely.
Okay, so that's the silver bullet. So Adam, what's your silver bullet?
It's very similar. Very similar. Yeah. Making medical records automated and personalized for the insurers. I think a big issue at the moment is insurers will go off for medical records and ask for something specific from doctors and get given 800-page reports with every single cough and cold a client's had for the last 30 years and have to go through all of that. So being able to say, I want to know about this condition, and getting information about only that condition back in a very timely manner.
Adam, would that be akin to like getting a credit score from like an Equifax or something like that? They have access to all of these different data sources and they can give me my credit score just like that. Something akin to that? Was that too simple? A silver bullet.
A little bit. It's a bit like using open banking and saying, I want to know everything about what you've spent at Tesco's. I don't need to know about anything else you've spent. It's a bit more like that, I'd say.
Super. Thank you very much. And then when we come to Georgia.
I'd probably say that would be the same silver bullet because it would make probably the biggest difference. And also from the poll that everybody stated, that seems to be the biggest blocker. But just to kind of try and be a little bit different, I would maybe say, let's make improvements to technology and AI as cheap as chips, and then absolutely there wouldn't be any blocker to anybody else doing anything either. That would be incredible, but I don't think that will change anytime soon.
Well, who knows? Who knows where the market will take us and where AI will take us, right? So, and I'm going to finish with yourself, Mark, please. Silver bullet.
To get to a situation where we've got an aligned mortgage in principle and protection principle journey. I think if we could get to a position where we've got as many mortgage brokers in the UK with the ability to give a confirmed decision as an underwriting outcome, the ability to actually buy a product at the same time they get that decision on principle on the mortgage, I think we'd see a massive movement in the conversion of life insurance in the mortgage market because we just make it so much easier and we stop the split conversation. So that, I think, and that's the big silver bullet for me at the moment, because I think that's a massive opportunity to write more protection business and increase that penetration in the mortgage market.
Mark, thank you so much. And whilst you were all talking, I hope I wasn't being rude. I was just kind of trying to draw what my takeaways, the value that I received from this session. So my key takeaways were those earlier decision and principle style and solutions for customers, so they kind of understand at that life point what something could cost, the connectivity challenge, the underwriting conversations, Georgia, that you spoke about, and really getting under the bonnet of those. Adam, your point about AI could do things differently rather than just doing things incrementally, improving things step by step. It could actually reinvent the way that we do things. And also finishing off on that point, different customers, different expectations, different experiences, and how this market responds to those challenges, really. But thank you to you all for your insights. Thank you to Criterion for hosting this and putting all the time and effort. I'm a huge believer in co-opetition, and co-opetition is all about where competing firms come to collaborate, because there is absolute evidence to suggest in every sector where that happens, markets grow. So thank you very much for joining today.